everybody. Welcome to the Trading Market Technicals morning call video for Friday, November the 1st. Yet another down day, down about 73. NASDAQ 1090, S&P down 6, and Russell down 5. And most of the day was actually, believe it or not, grinding from a mid-morning low. Right around 10:30, markets sold off on light volume, and we just literally started grinding higher. Markets were being bought up, and that's partly due to mutual fund inflows. They really start around this the 31st to the 1st of the month, and that's something that you really need to be aware of going into today. So we did have some buying coming in, probably pushing a little bit of short covering as well. But right around 2:30, the markets were pretty much flat, believe it or not, down very small. And we did get a report coming out of the wires that Israel had a military strike in Syria, and markets kind of sold off. But the one thing that was pretty amazing was the crude oil did not spike on that. And partly because Syria doesn't really supply too much of the world's crude oil, but it depends on who's who's getting involved. You know, whether it be Iran or something like that. Then you have something of a possible bigger conflict. But again, that's why I really am not a big fan of shorting crude. I like to be a better buyer of crude, and we'll talk about that in a minute. I'm not going to put any indicators. Everything really remains the same. We're having a tug of war here at the top. Looks like the markets are trying to carve a top, and once we get this mutual fund inflows out of the way, probably today we could really see the markets begin to start moving in a direction again, whether it be back to the upside or really correcting itself and moving lower. Now we're sitting on pretty good support here, 1752 to 1750. Let's just call it. As you can see, that's the 1272 extension in the E-mini S&P future, and it's been holding there. Yesterday it held there, the day before, and it held there all night in the electronic trade session. So it's going to need to break. But if we can break this 8. Then I would say the first shot would be, of course, the 20-day moving average. And again, remember what I mentioned yesterday. We have bullish symmetry in all of the moving average. They're just pointing totally up. So even if we get down to 1716 or even 1700 or even the upper trend line of the 2012 lows at 1686 would continue to be in a bullish uptrend, making higher highs and higher lows from these previous lows. So I wouldn't advocate such a big short book, but it's one thing is that if you're looking to position yourself short, now is not the time to do it. Let the market break this area here, let it run down and then back test. The only problem is, obviously, as we all know, when the markets do break, they break really fast. So just be aware of that, okay? But we're just kind of sitting here trying to carve a top here, and the markets are really quite boring the last couple of days. We had a big move up. We had a reversal, and then we're just kind of sitting there. We did take back just about half of that move, which is nice. That's really what you want to see. Usually when you put in a engulfing candle, the markets take back about 38 or 50% of that candle's move, and then we kind of continues to the downside. So that's really what we're doing today. But again, with these mutual fund inflows that come in, it's really going to play tug of war with the market here, okay? So just, again, keep that in mind. Just going to run right into the indexes because it's going to be a short video today. USO, like I mentioned, bear flag. We broke that the previous day, and again, we had some follow-through. Now, we're sitting at the lower end of this range here. I think I'm looking for a better buy-in at somewhere around the 34, 33 and a half area here for a trade. Remember, we broke down. We had this bullish symmetry. We carved the top, and now we're breaking down, making lower lows and lower highs. We have the 20 moving lower, the 50 moving lower as well, and of course we are now down below the 200 day. So really nothing good about crude oil here. Doesn't look too right. But again, for a trade, if you want to look to take a trade, I would be looking to be a better buyer into between these two areas here. Okay. Well, gold actually followed through from the FOMC minutes as well. It moved lower, but again, I am not looking to put out a gold trade short at the moment. I'd like to see what it does. Maybe carve this right shoulder a little bit more, maybe bounce back up it, and then fail. And then I'd put on a short trade here. Easier to manage, at least if you take out this area here, you're wrong, at least to the 200. But in between here, again, guys, it is a bearish pattern. We do see a head and shoulders pattern, neckline way down below here. And if it does break here, you could easily flush down to the 110 area. But again, with gold could easily be, in your face $20, $30, and that's something that I'm not really interested in doing. So keep in mind, let's keep an eye on this area here. Let's see what gold does. But again, gold is going to give us a nice trade, but we need to be patient on gold. Okay, let's take a look at the indexes, the spiders. As you can see here, we rolled off of this existence, this upper trend line area here, resistance, and of course this a horizontal trend line. So we have the little confluence area of resistance, which was support, and now we're just catching this guy right here at 175.44. Remember, I'd like to see it even get down to the 20 and maybe even the 50 area. We have a couple of big clusters down below here that still exist, but it's going to be tough here. But I'd like to get this market to move down, at least to readjust itself and and unwind that overbought reading that we have on literally on every time frame, daily, weekly, and even the monthly charts. So that's what scares me when we have all of these. And it doesn't usually happen in a monthly quite often, but when it does, you have to really be cognizant about that and worry that the markets are indeed looking to probably sell off here. So that's something that I'm going to be looking for going into next week, and probably look to sell some calls, maybe do a call credit spread, or maybe buy some puts, and and look for some weak stocks over the weekend to be ready to get shorted. Now, again, not saying to do it at this moment because we really haven't done anything yet. We're still holding up in the range here, and we're still holding our 8 EMA, which really gauges momentum. So until we break that on a closing basis, then I get a little bit more interested in putting out a short play. Intraday it's one thing, but right now we were looking to sell rallies, and the market just literally just rallied all day yesterday and then just dumped. So it's either one or the other. It's either close your eyes and just get short, which is not really a great trading plan. So risk reward when the market just do one thing and then grinds higher all day, it's a little tough. IWM, okay, same thing. Now the IWM is the weakest index of the 5 that would follow, and it is now at the 20-day moving average. So one of the leaders are starting to break down. So there's definitely some signs that the markets are kind of tired at these upper end of the ranges. And transportation, same thing. We did break this channel, as you can see. So breaking this channel is not actually a good sign as well. But if we can get back into the 20-day moving average, it's a healthy pullback. And as you can see here, repetitive patterns. We run up, we pull back, we run up, we pull back, we run up, we pull back, we run up, and it looks like hopefully we can pull back at least to the 20-day moving average and then reevaluate it. And JP Morgan, still into this triangle, so just a lot of noise here, not looking to do anything with that. Goldman Sachs, doing its thing. We're still above here, so it's still good. Again, even if it sold off to here, I wouldn't break this little area here. Otherwise, I'd be getting out of that. But again, Goldman really needs to hold above the 160, which it's doing so right now. Let's see if we can get a reversal today, maybe even on Monday. And again, XLF starting to break down here, getting to its 20. So this is what I want to see. When you see a lot of these sectors starting to break down, breaking that 8 EMA, more than likely a lot of the other indices will start to follow suit as well. And Apple, doing okay, not bad, even on a little bit of a weak market yesterday afternoon, held its own, so that's pretty good, not doing too bad. And of course the networking, IGN, coming out of the tech sector, literally broke the neckline of this head and shoulders pattern. You want to call it validated. I like to see it a little bit below it. We're sitting right on it. I'd give it till today to see if it actually validates this bearish pattern, and then reevaluate it again on Monday. See if it closes below yesterday's low, and then you can get short. Well, usually what happens, what I like to see, usually we get a push. Take that as a small quick trade, and then usually the markets actually backtest this into a bear flag and then break, and that's where you really want to get ready for the break lower. Okay, Qs on the weekly chart, as you can see, just holding the upper end of the range, and lastly, Qs are outside of this uptrend channel, and again, very similar to the transportation sector. Up, pull back, up, pull back. This one here went sideways, up, pull back, up, and again, looking to catch that 20-day moving average, and then we would reevaluate the market. I do like the market here in the longer term. I'd like to see the markets pull back here, and the markets need a healthy pullback. What's happening is everything is either gapping up or gapping down slightly, and then staying in these respected ranges all day, and it's just not fun for day trading. I like to see the markets move a little bit. Volatility is still extremely low. Put-call ratio is extremely bullish. Investor sentiment is very, very high to the upside. So all cards are betting on lower prices. But again, until the markets move lower and price moves lower, making lower lows and lower highs, you can't say, I'm just going to go out and short the market. Again, unless you're hedging. Okay? Just keep that in mind. Have a great day today, guys. Be safe. Have a great weekend, and we shall speak to you on Monday. Take care.